Half an hour away from the open of markets in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with David Ingles.
We'll get you straight now to live pictures from the Chinese capital, where officials from China's central bank, you have the Financial Regulatory Administration, and also the securities regulator also set to hold this briefing. Left side of your screens is that briefing. We're waiting for what they say, how they'll say it going into the market open today. It's quite rare, of course, that we do have a briefing before the markets open, going into a trading session.
And it all kind of was a very last-minute sort of planning, right?
Yeah.
It seems, right, that it all came together. In fact, we only found out who was attending maybe about an hour ago. Does this mean we're going to see some sort of stimulus sort of signals? And the timing of it, I think, is quite interesting. And the fact that they're bringing back the playbook, it feels like we're in September back again.
It does. And one of the very first, if not the very first line that came out when it actually began, and we're now getting official seated there, was an announcement that they did cut the RRR.
Yeah.
So we'll see whether or not that's what they lead with as well. We'll get you more lines coming through as we wait for that as well. 28 minutes to the opening bell. Let's just briefly look at markets right now. So some strength did come through in the Chinese currency on the announcement of this briefing, and also the announcement of trade talks, which we'll get to in a moment, coming through this weekend. We're giving up some of the strength, as you can see, 720 now on dollar China. Flip the boards, please, and have a look at futures. Futures are punching higher. 162 on the 10-year yield. 159 is a level you want to watch. Just below that, that takes you back to effectively record lows on the 10-year yield. Dollar Hong Kong, 775. Very quickly, U.S. futures, risk assets or bid havens are taking a back seat on progress on news flow on trade talks taking place. Pan Gongsheng is speaking very, very quickly. Just a check on Indian futures. That's the other major story we're tracking today. Military confrontation there. And we're open right now. We plunged going into the close. We're giving back some of the weakness, a little bit higher from the cutoff right now.
Can't stress what's really, the big news of the day. I mean, there's so much going on. But there you go, the governor of the PBOC there speaking now. Let's listen in.
The high-quality development of the real economy and created a sound financial and monetary environment for the sustained recovery and growth of the economy.
First of all,
since the beginning of this year, the various macro-financial data are performing rather well in terms of money and credit. The numbers are up, prices down, and structures are improved. That's the general trend. At the end of Q1, aggregate financing grew 8.4% year-on-year, loans up 7.4% year-on-year. But if you exclude the factor of local government special bond replacement program, then the year-on-year growth of loans was over 8%. Broad money supply, or M2, continued its steady growth at around 7%, markedly higher than the growth of nominal economic growth. Social financing cost remains low. Inclusive loans to micro and small enterprises, mid to long-term loans to manufacturing, and loans to sci-tech SMEs grow faster than average, and the structure of credit continues to improve. The financial market had positive performance in Q1. The stock market operated steadily with vibrant transactions. Shanghai Composite Index kept at around 3,300. The bond market carried out self-rectification because of boosting economic confidence, and onshore and offshore RMB exchange rate against the US dollar appreciated a little bit by around 1% from the end of last year. Since the beginning of April, despite strong external shocks, our financial system remains robust, and the financial market demonstrated strong resilience. The Shanghai Composite Index, after its decline on April the 7th, bounced back and stabilized, and the 10-year Treasury bond yield hovered at around 1.65%. RMB exchange rate against the US dollar, after slight depreciation, came back to around 7.23 yuan. Global economy now is filled with uncertainty, heightened economic fragmentation, and trade tensions, which disrupted global industrial supply chains and triggered turbulence in the financial markets, and also weakened the momentum for global growth.
A
while ago, I was in Washington, D.C. for the spring meeting of the IMF and World Bank. At the meeting, central bankers and heads of international organizations expressed concern over this. The PBOC will carefully implement the decisions and instructions of the CPC Central Committee, promote high-quality economic development, promote high-level opening up, and actively participate in international financial governance and cooperation, and safeguard the rules-based international economic and financial order. At the same time, we will work both in terms of the opening up and the security of the financial sector, explore the central bank's role in macroprudential management and financial stability, and keep China's forex, bond, and stock markets stable. In order to implement the requirements of the April 25th Political Bureau meeting, which gave a detailed analysis of the current economic situation, continue to implement the appropriately accommodative monetary policy, and promote high-quality economic development, the PBOC will intensify macro regulation and roll out 10 measures in 3 categories as a package. First, quantitative policies. Through RRR cuts, we will increase mid to long-term liquidity supply to keep ample liquidity on the market. Second, price policies. We will lower policy interest rate and the interest rates of structural monetary policy instruments, which is the interest rates paid by commercial banks to central banks through reloan programs. And we will adjust and cut provident fund loan interest rates. And third, structural policies. We will create and implement the structural monetary policy instruments to support sci-tech innovation, boosting consumption, and inclusive finance. So in total, in these 3 categories, there are 10 specific measures. First, lower the RRR by 0.5 percentage points, which will release around 1 trillion yuan of long-term liquidity to the market. Second, improve the RRR system. We will incrementally lower the RRR for automobile finance companies and financial lease companies from the current 5% to 0%. Third, we will lower the policy interest rate by 0.1 percentage point, which means to lower the open market 7-day reverse repos interest rate from the current 1.5% to 1.4%, which is estimated to drive LPR down by around 0.1 percentage point. Fourth, lower the interest rates of structural monetary policy instruments by 0.25 percentage points, which includes the interest rates of various special purpose structural facilities, the relending to support agriculture and small and micro enterprises, which will be brought down from the current 1.75% to 1.5%. These are funds provided by the central bank to commercial banks. And the interest rate of PSL will be brought down from 2.25% to 2%. PSL is provided by central banks to commercial banks. Fifth, cut the interest rate for provident fund loans by 0.25 percentage points. The 5-year loan interest rate of first homes will be brought down from 2.85% to 2.6%, and the interest rate of other mortgages will be adjusted accordingly. Sixth, we will add 300 billion yuan of real loans to support sci-tech innovation and technological transformation. That will bring the current 500 billion to 800 billion yuan. which will continue to support the policy of large-scale equipment upgrading and consumer goods trade-in programs. Seventh, we will establish a re-lending facility for services, consumption, and elderly care, totaling 500 billion yuan. Eighth, we will add 300 billion yuan of re-loans to support agriculture and micro and small enterprises, and synergize with the policies of cutting relevant facility interest rates, which will support banks in expanding their credit issuance to agriculture, small and micro enterprises, and private enterprises. Ninth, we will improve the two monetary policy instruments supporting the financial markets, which means we will combine the 500 billion yuan swap facility for securities, funds, and insurance companies, and the 300 billion yuan re-loan program to support share buybacks and increased holdings. That will bring the total volume to 800 billion yuan. 10th, we will create a sci-tech innovation bond risk sharing facility. The central bank will provide low-cost real-loan funds, which can be used to buy sci-tech innovation bonds, and together with local governments and market-based credit enhancement institutions, and through diverse credit enhancement measures such as joint guarantee to share the default loss risks of bonds. We will support sci-tech innovation companies and equity investment institutions in issuing low-cost, long-term sci-tech innovation bonds financing. All these 10 measures will be published on the website of the PBC, and we will implement them. Going forward, the PBC will continue to follow the instructions of the CPC Central Committee and the State Council, implement the appropriately accommodative monetary policy, and in light of the domestic and international financial and economic situations and financial markets, continue our monetary policy regulation and strengthen our coordination and synergy with fiscal policies and promote high-quality development of the economy. Thank you. Thank you for opening remarks. We now invite our next speaker.
Friends from the media, good morning. It's a great pleasure to meet you again and take your questions. First, on behalf of the NFRA, I wish to thank you for your long-term support for our work in the financial regulatory sector. Since the beginning of this year, the NFRA has honestly implemented the decisions and instructions by the Party Central Committee and State Council, implemented the guidance principles of the April 25th Politburo Conference. Keeping in mind the worst scenarios, we have stepped up and expanded policy measures, actively responded to external impacts, and our work has made solid progress. First, the financial operation has remained generally stable. Currently, the businesses of banking and insurance institutions are carried out in an orderly way. Major regulatory indicators remain in a healthy range. Large financial institutions are stable, playing a significant role as stabilizers. The reform and risk diffusing of small and medium financial institutions have made important progress. From the first 4 months of this year, the capital adequacy ratio of banks and the solvency ratio of interest companies remained stable. The non-performing loan ratio dropped by 0.1 percentage point, and provision coverage ratio grew by 10 percentage points year-on-year. It could be said that the safety cushion has become thicker. Second, the regulatory policies continue to take effect. We have strengthened the guiding role of regulation, accelerated regulatory system improvement, and revised and adopted systems in terms of corporate governance, regulatory rating, and consumer protection. We have formulated opinions on the high-quality development of the banking, insurance, and asset management industries, and enhanced the professionalized and specialized development capability. We have guided the industry to further reduce cost and improve efficiency. improved capital replenishment mechanisms. And in terms of large commercial banks, the capital replenishment are picking up speed. And major insurance companies are on the agenda. These measures will further enhance the resilience of the financial system and the capability to serve high-quality development. Third, quality and effectiveness have been enhanced. We have formulated special implementation plans on the major areas of finance and adopted financial policies supporting consumption and foreign trade and step up our support to major areas and equipment upgrading and consumer goods trading programs. For the first 4 months, banking and insurance industries have provided the real economy with additional financing of 17 trillion yuan. The loan renewal without principal repayment has altogether provided renewal of loans 4.4 trillion yuan since last September. Short-term export credit insurance has increased its coverage amounts by 15.3%, providing strong support for stabilizing foreign trade. For the first 4 months, the payout of insurance was 1 trillion yuan, and the car insurances for new energy vehicles covered more than 10 million cars, and at the same time, the long-term reserve have exceeded 10 trillion in terms of elderly care and health insurance. Next, we will follow the instructions of the Party Central Committee and the State Council, increase the sense of responsibility, urgency, and initiative, step up efforts to implement the existing policies, and step up efforts to roll out additional policies to further cement the fundamentals of economic recovery. And recently, we will roll out the following 8 additional policies. First, a series of financing system that is commensurate with the new development model of the housing sector to facilitate the stabilizing of the housing sector. Second, we'll further expand the pilot of long-term investment of insurance funds to increase more funds for the market. Third, adjust and improve the regulatory rules and lower the risks of insurance funds investments. Support efforts to stabilize and activate the capital market. Fourth, we will accelerate the rolling out of package policies supporting micro and small enterprises and private sector financing, substantiate the working mechanism to help stabilize enterprises and the economy. Fifth, we'll roll out a series of measures to support the banking and insurance industries. For entities affected by tariffs, we will provide targeted service to help them with operation and exploration of market. Sixth, merger loans management rules will be rolled out. And seventh, we will extend the entities that launch financial asset investment companies to eligible nationwide commercial banks and support investment to SDI companies. And eighth, formulate opinions on the high-quality development of sci-tech insurance, better leverage the role of insurance, of risk sharing and compensation. Thank you. Thank you, Minister Li. Now I give the floor to Mr. Wu Qing.
Ladies and gentlemen, friends from media, good morning. First of all, I'd like to say thank you to your support and long-term support and attention for the work of China Security Regulatory Commission, the CSRC, and capital market. I have to say, your understanding and support is very important for us. Since last year, we have been implementing the plans and decisions of Party Central Committee and State Council, implement the new 9 guidelines and a series of policy frameworks. The momentum of the market is good now. Since the beginning of April, the U.S. government's tariff policy has impacted the economic and trade order of the world, brought turbulence to international financial market, which give us pressure to the domestic financial market, facing the sudden and severe challenge under the able leadership of Central Committee, State Council, and the coordination of the Central Financial Commission. We made swift action with relevant authority and introduced coordinated measures from the perspective of Capital Fund and expectations, including the People's Bank of China, State-owned Asset Supervision Administration Commission, and State Administration of Foreign Exchanges has released strong policy signals. The Central Huijin Investment Limited galvanized into action Social Security Fund, Security Investment Fund, institutions of bank and insurance and all kinds of other investors has consolidated their confidence and bought in more stocks, and a lot of listed companies repurchased shares and increased the equity stake to maintain the stability of the stock price. With the common effort of the participants, of investors and entities of market, the China A index has experienced a short period of turbulence, which is just one day, and then it rebounded and gained good momentum and demonstrated strong resilience and capability of risk resistance. In the April 25 Central Political Bureau meeting has emphasized on maintaining the stability and vitality of the capital market, which embodies Central Committee's expectation to our work in stabilizing the market, and we will unswervingly manage our country's own affairs well, ensuring stability in the operation of market, as well as to make progress in stimulating the vitality of the market and making the market assume its role. The first is to consolidate the good momentum of the market, enhance the monitoring supervision of the market, and the comprehensive judgment of the risk, dynamically enhance our work plans against the external shocks, and support the Central Huijin Investment Limited to assume its role in stabilizing the fund. It's safe to say that the Huijin Investment Limited is galvanizing into action in the front, while the People's Bank of China is supporting in the back. And this is the most able, it can be said that this is the most able institution in the world when it comes to finance. Also, we will work with the PBOC to improve the capital market monetary policy instruments long-term mechanism to make all the entities of a market to assume their role in stabilizing the market. Second is put focus on new quality productive forces. Recently, we will introduce deepening reform measures and policies. We will introduce the policy and measures for deepening reform of this sci-tech innovation board and growth enterprise market, and enhance the adaptiveness and inclusiveness of the market structure review mechanism and investor protection. Second is to introduce a newly revised listed company material assets restructuring management plan, and regulatory guidance comes with that to make the capital market as a main channel for M&A and restructuring. Third one is to make effort in the development of sci-tech innovation bond, improve the issuance and register procedure, improve credit enhancement support to provide all-around financial services for the sci-tech innovation corporations. The third point is to facilitate the mid and long-term investment. On the one hand, the returns must be ensured and continue to improve the listed companies' governance and improvement of performance, and cultivate the culture of returning the return to the investors and implement the action plan for promotion of the high-quality development of public mutual fund, which will be released today to embody the connection between the investors and the management companies to form a more returns, more investment, and more stable market cycle. The stability of the stock market is about the economy and society, as well as millions of investors' personal interest. Currently, the good momentum of our economy is being consolidated, and we are fully prepared in terms of policy when it comes to cope with the external shocks. Just now, Mr. Pan and Mr. Li has already introduced some policies, and we can see from that we are prepared. We will inject more certainties to a world of uncertainty, which created solid foundation and condition for our capital markets' stable operation. As for the capital market, our confidence mainly comes from four aspects. The first one is the able leadership and resolute determination for maintaining stability of the market of the Central Committee and the State Council. This is not just a slogan. We have all witnessed the solid and concrete actions being made, as well as the results, tangible results. The second aspect is 1+N policy framework's implementation, which facilitated a positive and deep change in the market structure, a coordinated market ecosystem of fundraising and investment is being formed in an accelerated manner. The third aspect is the narrative, sci-tech narrative of the China A index is becoming more clear. The potential of the new quality productive forces is being demonstrated. Innovation of science and technology and the industry will provide more valuable sources of development for the capital market. Fourth aspect is that the China A index is still being underestimated according to the financial industry, such as the Shanghai and Shenzhen 300 index. Has a 12.3 market profit rate, which is lower than major index in the world, including Stanford 500. And when the global market is facing more unstable factors, China's asset value is considered having more value and attractiveness. Let's put it in simple. Our market has a tremendous feature. It is a good market. It has good momentum for economic development, good macro policy, good institutional guarantee. Therefore, when we are putting more factors of certainty in our market against a backdrop of uncertain environment, which is good. All in all, on the road ahead, there will always be wind and rains, be it light rain and tender wind or high waves and storms. We have the condition and confidence and capability to realize stable and sound development of China's stock market. Thank you. Thank you, Chairman Wu. Now the floor is open for questions. Before you ask questions, please notify your affiliation.
好，先这边吧，第3排这位女记者。对，是她。
好的，谢谢主持人。中央广播电视总台央视记者提问。刚才潘行长您提到了下一步将继续下调存款准备金率和政策利率，这个大家都非常关心。能否请您详细的介绍一下？谢谢。
Thank you for a question. A monetary policy aggregate measures adjustment, or LPR and the RRR.
这些调整的各个方面的都。
These kind of adjustments attract good attention from.
Good morning again, and welcome to all our viewers just joining us right now. We're just about to open these markets right now, and we're coming across a lot of major announcements coming through out of Beijing. This ongoing briefing taking place. You're looking at, of course, the PBOC governor. They're announcing a series of rate cuts, other measures as well to support sentiment and this market. We're 5 seconds away. If you look at futures, we are expecting to see some solid gains in the opening minutes here. Mainland markets and Hong Kong markets are coming online. There we go, 1.4% to the upside on the CSI 300. And at these levels, on the Hang Seng Index, 23,200. Flip the page, please. We are now set to erase all the losses from the time that Donald Trump announced the tariffs on April the 3rd. Our time here. So we are set to reverse the losses in April, and we are set to, in fact, gain higher, about 20% from the lows that we had back in April. Flip the boards, please, and have a look at Hong Kong and where we are as far as that's concerned. Okay, let's bring in the team now to help us understand what we've heard so far, Yvonne.
Yeah, it was 30 minutes. They wrapped it up right before markets opened, and it seems like markets are taking it very positively right now. Let's bring in Min Lo, our China correspondent. Also here is Zhang Zhiwei, president and chief economist at Pinpoint Asset Management. Min, I'll start with you. Markets were hoping for something punchy. What do we get?
Yes, markets had huge expectations going in just because the big wigs are there. PBOC governor was there, so everyone was expecting, will there be a rate cut? And yes, they delivered. Triple R cut by 50 basis points and a 10 basis point cut to the 7 days policy, 7 days reverse repo rate. That policy rate cut was a little bit small, which perhaps suggests that maybe the PBOC is still reserving a bit of the dry powder for a prolonged tariff war with the U.S. But they also unveiled a series of very comprehensive measures. Some sectors that in particular they are supporting: the tech sector, consumption, elder care. They are relending facilities to support these sectors, 800 billion yuan for tech and about 500 billion yuan for elder care and consumption. And then you have the CSRC regulator, the chair Wu Qing as well, talking about stabilizing the stock market. He's saying the national team, Central Huijin, will be stepping in to stabilize the stock market, acting as this quasi-stabilizing fund, and saying that markets in China are stable because the Chinese economy is stable. And I think they have done a pretty good job. If you look at last month, I think volatility for Chinese markets had been very, very low. And even the 10-year yield for the Chinese government bond has been pretty range-bound over the last few weeks as well.
Zhang Zhiwei, let me bring you in. You've listened into part of this, if not most of it. Just your initial take on what's important here.
Yeah, very positive. A lot of things, as Min mentioned, interest rate cuts, triple R cuts. We've been waiting for this. Actually, the government talked about these cuts several months ago. I mean, we've been waiting.
Last year.
Yeah, exactly. And they always say that they will do it when the time is right. And it looks like they picked the perfect time right before the meeting between Chinese and officials and the U.S. officials about the trade negotiation over the weekend, right? So they cut the triple R, cut interest rate. And they also mentioned that Central Huijin will play a role as a quasi-stabilization fund. I think this is the first time they officially acknowledge that Huijin is playing this role, right? So that's something very important. That means down the road, Central Huijin, this could become a part of the Central Huijin's operation. It's not just a one-off thing. This could be more of a long-term arrangement. I think that's also an important message.
Do you see this as more than just boosting liquidity into the market? Is this a broader sort of sense of trying to lift the economy?
Yeah, I think so. I think this is part of the overall package, right? But what you mentioned, I think one part that is still missing is fiscal, right? So there's no speaker from Minister of Finance. There's no discussion about the fiscal situation, how they're going to, whether revise up their fiscal deficit, things like that. But those are probably, the second batch of policies. If the trade war become even worse, if the economy gets even weaker, then fiscal side could speed up.
Why do you think the timing was right to do this a few days, to your point, before the trade talks began?
A few things, but I think the very interesting development is what happened to CNH exchange rate. So over the past week or so, if you look at USD CNH, right, so the offshore exchange rate is strengthened quite a bit, right? So that CNH moved close to the fixing rate. That means the depreciation pressure on renminbi already disappeared over the past week or so. Right. So that opened the room for PBOC to cut interest rate and cut triple R. So they are not worried about, cut interest rate, widen interest rate differential, capital outflow. Those kind of worry is gone.
Min, talk us about the timing, as you mentioned, right? These trade talks, we're going into Switzerland this weekend. What are investors hoping for? Is it going to be some sort of suspension in tariffs? Are we thinking some sort of end of the trade war? I mean, what's expected here?
Yeah, I think the U.S. side has been playing down expectations. I think there are two things that are pretty key. One is the timing. Actually, it's been moving pretty fast since China acknowledged that it's assessing possibility for trade talks. And number two, China is sending a very top-level official, He Lifeng, the vice premier. If you remember, in the first phase one trade deal with Trump that was negotiated by the vice premier at the time, Liu He, he was the one who signed that trade deal with President Trump. This time they are sending He Lifeng, so it's happening at the highest level, and that is a good sign. But remember, it is still a very, very challenging trade talks because Trump has already anchored expectations at 145%. He can easily just say, okay, we'll cut tariffs by half and tout a win. But for China, then you're still left with 70-80% tariffs, which is still unthinkable even 6-7 months ago. That's why the Chinese Commerce Ministry this morning released that statement, essentially saying that China is still asking the U.S. to remove all unilateral tariffs. The U.S. started this. They should be the one that must show their sincerity in de-escalating first.
Zhiwei, it seems like they're having these talks before even this April trade data is coming out on Friday.
Right.
Are we expecting some pretty ugly numbers? How painful do you think?
Not really. No. Not really. Because we already got, Korea reported their April trade data was actually okay. Yeah. And there are high-frequency data points that Chinese exports, container ship travel, those kind of things, they look okay. I mean, weakened a bit, but it's not falling off the cliff.
One of the things that Wu Qing mentioned there in Mandarin, right? 市场比较靠谱, I think is how he said it. What is that? Okay, if you could translate that, and what's the context there?
I think that the message is that the policies, the macro policies in China are reliable, predictable, that investors should have stronger confidence in those policies. When the policymakers say something they will do, they will deliver. I think that's the message.
It's a big change in the communication style.
It is.
What we've been hearing in the past.
It is. I think the policy has become a lot more proactive and responding to the concerns from the market. Yeah. I think that's the message.
Yeah. Where do you think the currency goes short term?
I think it's stable, actually. Now, over the past week, I think what happened in Asia is quite interesting, right? Taiwan dollar, Korean won. So there's a lot of volatility. I think the message from the government is that they want China to be kind of a stabilizing force, right? So that CNY is an anchor for a lot of the emerging market currencies. So I think they want the exchange rate to be stable. At this stage, when the pressure is on the currency to appreciate, they cut interest rate and offset some of the appreciation pressure. I think they want the bilateral rate, particularly against the dollar, to be stable.
There we go. Yeah, maybe opening up more room in case they need to do more, and certainly keeping the currency stable here. Zhang Zhiwei will be staying here with us, President, of course, Chief Economist at Pinpoint, and, of course, Min Lo here, China correspondent here, just on the latest. Just a recap on your right side of your screens, what has been announced as far as monetary policy easing is concerned. And as you can see, markets are reacting very favorably, although I should mention we're coming off highs a little bit on the benchmarks right now. Hang Seng Textile is up about 2%. The opening minutes, 8 minutes into the session, these markets are bid. Good morning. You're watching The China Show.
China's central bank and financial regulators are holding that press briefing, continuing on here and well into 40 minutes into the session now. And really what it has done is really try to bring a little bit more confidence into this market. But then again, it's been interesting, Dave, right? We talked about how stocks are basically recuperating or have already fully recovered from Liberation Day already. Was there a need to do this and unleash this sort of stimulus is a key question here too.
Yeah, and like the initial headline that dropped early afternoon Asia time yesterday, calling for the briefing to take place at 9 a.m. was, you have financial officials to hold the briefing on financial stability, and I had to look at the charts. Markets were not falling off a cliff. In fact, to the point there, the gap higher simply pushed us over the line. The economy was arguably, certainly not on solid footing, but it certainly wasn't. It wasn't the context we were in back in September of last year when we had that briefing of a similar magnitude. In fact, why don't we put that question in terms of the timing to Zhang Zhiwei, President and Chief Economist at Pinpoint Asset Management. I think context is important here. Was there a need to stabilize markets, or is this almost a preemptive announcement.
That's right. So I'm wondering about this, right? So my sense is that this is probably not driven by domestic reason, because the economy is doing okay. The market is actually doing okay. So there's no urgency pushing the government to do this, at least from the domestic side. But maybe this is related to the trade talk over the weekend with the U.S., that before that trade talk happens, China want to show that we have these measures to boost our domestic strength so that we're in a strong position to negotiate with the U.S. I wonder whether that's one reason.
Yeah, and I guess there is that expectation, if these trade talks don't go well, that the export engine is going to sputter.
Right.
When are we likely to see that in the data?
Yeah, so in the past week or so, we've been looking at high-frequency data, talking to, exporters. It looks like it's a gradual process. It's not falling off the cliff immediately, because a lot of these contracts the exporters sign with their clients, they are long-term contracts, or not that long, it's 3 months contracts, so that the April export and May export, some of that already been contracts signed before. Yeah. And there's also probably a lot of transshipment that China's not shipping directly to the U.S., but shipping to, say, Canada or other countries. So that China's total exports, I think, will be released soon, right? So that number, I think, is probably not going to be very bad. Yeah. Instead, what we're worried about is this high tariff stay for maybe 2-3 months. By the end of the second quarter, you will have probably the total exports collapsing and the factories getting closed. That is a risk that people need to watch out for.
Scott Bessent, the U.S. Treasury Secretary, said himself, right, in that Fox News interview, is that the tariff rates are so high, it's basically like a trade embargo nowadays.
It is. It's restricted to both sides, which they don't want. What they want is for both sides not to stop trading, but they want fair trade. What are your expectations for this upcoming, for this initial round of trade talks?
Well, I think this probably will take some time, actually. It's probably a long series of negotiations. Sometime in the middle, they probably will cut tariff. My expectation, they will cut it to maybe 50 to 60%. I think that's probably a lot of people think in the market that way, that this will be a temporary measure. But the big question is whether this is the end of the trade war or it's just a pause of the trade war, right? So this uncertainty is still lingering there. And then 50 to 60% tariff, I mean, that's much lower than 120, 130, but it's still pretty high. It's still pretty high. So for a lot of the corporate people, it's still pretty damaging. So that's, first we need to get that number, whether it's a 50, 60, whether that's doable in the short term. And then we started to ask questions whether this is a long-term arrangement or is more of a pause.
Let's play that game. In the event, it's 50% for the foreseeable future. So that's the best case from this weekend. That could be the worst case still for the economy. If it's 50% tariffs on both sides, how do you think the economy holds up in that scenario?
The economy was still slow, right? So I think the damage to the global trading system is still there. That exporters still face much higher tariff. Supply chains still may face disruption. So the shock is just smaller, but it's still a negative shock. So the economy, probably in the U.S. as well as in China, will slow. And also the very important point is this doesn't end the uncertainty. So the uncertainty is really hurting. If you're running a multinational company, your capex in all these markets, how do you arrange it? This doesn't really solve that problem.
So you mentioned about the Taiwan dollar, and a lot of people attribute it to these life insurers that were hedging, given their dollar exposure. In China, though, it's a bit different, right? It's more about the conversion of FX through exporters.
Right.
Are we likely to see exporters do the same thing in terms of selling dollars?
Well, in the short term, I don't think that's going to happen because the exchange rate is pretty stable. So 7.3, 7.2 for the CNH, and I don't think the government will allow the currency to appreciate in a very big way, like what happened in Taiwan. I think that would be very surprising to me if it actually happened. I think in this trade talk, let's see whether the exchange rate become an issue or not. That's still not clear. I think yesterday there's an interesting message from the Bank of Korea governor. He was in Milan. He answered a question, and he answered that his comment is that they are not sure what the U.S. want about the exchange rate. Whether they want the dollar to be stronger or weaker, they don't know. He said it actually publicly. I think that interesting comment that also from China's side,
they don't know.
Yeah, they don't know exactly.
Yeah, it's a very strange period we're in where people are assuming that the U.S. might want to, I guess in some ways, devalue the currency? And we don't know, right? We don't know if it's part of negotiations. We don't know whether that's something that if you strengthen your currency that maybe gives you an upper hand with negotiations. In terms of trade, so let's say Chinese exporters, anecdotally, what is the currency of choice right now in terms of settling trade? Is it more renminbi now than US dollar? I think that goes into Yvonne's question too, what people are sitting on.
I think the renminbi invoicing certainly rising, particularly in terms of trade between China and non-US countries, right? So ASEAN countries, for instance, I think some of those importers, they are happy to take renminbi because they trade a lot with China within the region. Though also, the Belt Road countries, some of that trade probably now more increasingly invoiced in renminbi. So that trend is rising, certainly. But, the trade between China and the developed countries, certainly with the U.S., most of the trade is still in dollar.
Yeah. You mentioned about domestic demand seems to look solid. And so we saw the holiday data looking pretty good as well. Can domestic demand in some way pick up the slack that maybe potentially exporters could lose?
Well, that I think will need help from the government. I think the current demand, the travel data looks pretty good. But if you look at overall data, like PMI data, weakened a bit. Yeah. So the exporters, as I said, are doing still okay. They're not really collapsing. But if this, the trade situation continue for a few months, the damage translate into labor market, translate to consumption, that's a risk certainly to watch, right? So same thing in the U.S. People are watching very closely labor market, whether, the non-farm payroll data will weaken next month or not, how quickly that will translate to consumer sentiment. That's also, the damage is on both sides.
Yeah, and they kind of need to really talk and just figure this out, amongst themselves. Zhang, fantastic. Thank you so much for taking the time to speak with us here. President, Chief Economist at Pinpoint Asset Management. We're looking at Chinese equities right now. We're slightly bid still. We're coming off highs a little bit onshore and also here offshore. We'll also unpack the other big story taking place right now between India and Pakistan. The futures there, after gapping lower, going into the Asian Wednesday, slightly higher at 217 points to the upside of Nifty futures also trading right now. So you have a China story and you have a South Asia story. Plenty more ahead. This is the China Show.
All right, another one of our top stories here this morning. Pakistan says it has shot down 5 Indian planes carrying out strikes inside its territory. India says it ordered the strikes against what it calls terrorist camps after last month's attack in Kashmir that killed 26 people. Islamabad says 8 civilians were killed in the Indian raids and has vowed to respond, with Prime Minister Shehbaz Sharaf calling India's actions cowardly. Now, there's no word so far on any Indian casualties. Relations between the nuclear-armed neighbors have been strained since last month's Kashmir killings, which India has called a terrorist attack.
Created by India, if India is ready to back down, they have taken the initiative. We have just responded. We have been saying all along last fortnight that we'll never initiate anything hostile towards India. But if we are attacked, we'll respond. If India backs down, we will definitely wrap up these things, But as long we are under attack, under fire, we have to respond. We have to defend ourselves.
And, of course, we continue to reach out, of course, to the Indian side of things as well. Now, on that very note, we are hearing from the Indian Defense Ministry that they'll be holding a briefing at 10 a.m. local time. So that's in just over, if I'm not mistaken, just over 2.5 hours from now. Let's bring in our government reporter, Sudhi Ranjan Sen, joining us from Delhi right now to take us through what the mood is there, Sudhi, and what's the latest there? What can you tell us?
Well, I mean, the number one thing that sticks out or stands out in this entire thing is, the relative silence that we see from India. We have seen one very brief statement coming out of the Defense Ministry early this morning. Beyond that, contrary to what we have heard, a barrage of information or claims coming from Pakistan, there has been nothing so far from India. That stands out very, very much in this entire atmosphere. Of course, we have seen the opposition party, the Prime Minister, and everybody else coming out and congratulating the military for having successfully, carried out these strikes in Pakistan and across 9 targets, as the Indian statement said early this morning. But beyond that, officially, we do not exactly know what these targets are. What all? I mean, of course, what the Indian side has said is that these targets are neither civilian nor military, but these are facilities suspected to be used by proscribed terrorist organizations that have been proscribed by the United Nations. These are the facilities that India has struck, and beyond that, we do not know. The mood, of course, if you look at it, is likely to be very, very high, because there was a bit of the strikes was a bit of a dampener and had kind of affected the entire nation.
Yeah, so India did say this was, quote, non-escalatory, right? It was precise, it was a restrained response. Is there a real danger now then, or not, that this could escalate into a wider war?
Well, I mean if you look at India's statement, that's exactly what they have said, that this is a non-escalatory, the strikes are non-escalatory in measure, precisely because India has stayed away from military targets, has stayed away from civilian targets. Now, whether this escalates further, a lot will depend on the response that you see from Pakistan. A lot will depend on how Pakistan, takes the next course of action. In the past, we have seen, I mean, this is not the first time that India has carried out such strikes. We've seen these kind of strikes in 2016 and in 2018. Thankfully enough, those strikes and the aftermath of those strikes were not escalatory. Things kind of cooled down after the strikes on both sides. In 2016, of course, Pakistan denied there was much damage, and that happened because of the Indian strikes. In 2019, a similar response followed, and of course, there was, for the first time, we saw fighter jets taking on each other in the skies in Kashmir. One Indian jet was down, a soldier was caught and returned, but that was the end of it.
Yeah.
Whether that happens right now, not clear.
Suri, thank you. Suri Ranjan Sen there, our Bloomberg government reporter on the latest. We're bringing the markets here right now. Of course, we're still waiting for Indian markets to open up, but China responding to those 10 measures coming through from authorities in the past hour. We have plenty more coming up. This is Bloomberg. Welcome back to the China Show. Here's a look at the HSI half hour into the session. Of course, this press briefing still underway. I believe it's still the Q&A right now. And yes, it seems like this news from Beijing was welcomed by investors here today. You take a look at how H shares are doing. We're up about 1.5%. Hang Seng is up 1.6%. But keep in mind, we're still off some of the highs from what we initially reacted to, this 10-step sort of plan to stimulate the economy and markets too.
And markets, yeah. So a couple of rate cuts. Some series of measures, including, by the way, central Beijing, and maybe might that be a semi-permanent, if not permanent, feature to put a floor underneath this market. And I think when you look at things like brokerages are really moving on the back of this. Yes, we're coming off highs. Volumes are on the lighter side here in Hong Kong. We're still holding above the 23,000 handle though, on the Hang Seng Index, and certainly key here is 4,000 on the CSI, 3,000 is key on the Shanghai Composite. Psychologically speaking, of course. Hang Seng Tech, 2% to the upside. Brokerage stocks, we talked about that. Let's have a look at that, please. Certainly when you do tend to get markets doing well, market active, and then you have a lot of these listings coming through as well, and that's a separate story that we probably don't have time to get into right now, will bode well for a lot of these brokerages on your screen. CICC, all the way down to Galaxy Securities. Quite fittingly, on the left side of your screens is the CSRC chair there, Wu Ching, taking a question there from the press. Very briefly, the mood across these markets, we haven't even talked about the trade talks taking place this weekend. President Xi Jinping is in Russia. That's a parallel story that we'll get to later on. U.S. futures, European futures, Asia, and also going into the London session right now. So we're better, but also coming off highs here a little bit on most metrics here.
Yeah, and certainly there's been two sort of tailwinds that are happening in the markets here right now. Let's get to what we just heard from this briefing in Beijing. China reducing its policy rate and lowering the amount of cash lenders must keep in reserve, that RRR, as Beijing ramps up efforts to help an economy caught in a second trade war with the U.S. Let's bring in our China correspondent, Min Lo, on the key takeaways from this briefing.
Yeah, so a slew of measures that we have heard so far, the cutting the RRR ratio by 50 basis points, cutting the 7 days reverse repo rate by 10 basis points, and then a series of structural lending tools, relending facilities, about 800 billion yuan targeted at the tech sector, which is China's long-term priority, and then also about 500 billion yuan for the elder care and consumption, again, part of that priority to boost domestic consumption to make up for the shortfall in exports that are going to be hit by tariffs. Also, more support for those small and medium-sized exporters that are hard hit by tariffs, financing support for them, emergency plan to counter those shocks. They touched a little bit on property. Remember last September during the PBOC briefing, we have the PBOC actually talking about lowering down payment ratios and mortgage rates. This time they didn't mention that, but they did say they will speed up the financing rules for supporting the new development model for real estate. We have seen a pretty fragile sort of recovery in the property sector so far. And I guess what's key also is the timing of this, coming just ahead of those U.S.-China trade talks, a series of measures really to inject a bit of a stimulus into the economy, suggesting that China is still prepared for a protracted tariff war, that even with the talks beginning this weekend, it's going to be a pretty long-drawn process.
Our friends at Bloomberg Economics have now just put out the reaction here. I'll just read the top two lines here. The monetary package is stronger than expected. It is a powerful signal that policymakers are committed to boosting sentiment and also growth ahead of trade talks, which we know are taking place this weekend.
Yeah, it's also a signal of confidence, right? Because we have heard from the Chinese policymakers repeatedly saying that they have ample policy tool space to protect against these external shocks. And they're sort of putting their money where their mouth is and putting these out just ahead of the trade talks, and the trade talks as well coming this weekend finally, and it's in some ways the first time we are hearing coordinated messages from China and US, the first time where both sides issued statements at the same time, 6 a.m. Beijing time this morning, acknowledging that the trade talks are happening after weeks of both sides really disagreeing with each other about whether they're even speaking to each other or not. So this is happening in Switzerland, a neutral country. He Lifeng will be there. He's the vice premier, a very high-level official that is overseeing the trade talks. And of course, everybody is figuring out to what extent is the U.S. willing to lower tariffs and to what extent is China willing to accept that, given that they have so far said that U.S. needs to remove all unilateral tariffs.
Min Lo, our China correspondent there. At this point, let's bring in Henry Wang, founder and president at Beijing-based think tank, the Center for China and Globalization. Henry, good morning from Hong Kong, and thanks for taking the time to speak with us. And I imagine fairly last minute for you, so we appreciate that.
Thank you.
The trade talks are official trade. The first set of official trade talks at a very high level are taking place this weekend. What expectations do you have?
Well, I think after there's so many escalations and pressures and also, the running wild of speculations. And finally, I think that both sides has agreed to meet in Geneva. And actually, as you said, David, this is really high level. Vice Premier He Lifeng is actually on top of those issues. He actually has constantly met U.S., other senior people from U.S. For example, he met Hank Posner in March. He met John Thornton from honorary chair of Brookings and Asia Society in April after war takeoff. But also he met a businessman like Ray Dalio, like Jason Huang, the CEO, Jason Huang, and many others. So I think he's on top of these issues. And so I think that U.S. has been over a dozen of times saying that they want to talk with China. So finally, China agrees to that, and I'm sure this is going to be a good start, even though it's late. But at least start talking, start exchanging, and once you have a face-to-face meetings, I think that make a lot of difference. And then you can hear directly truthfully and frankly of each other's opinions. And that's better than really hijacked by the social media, by the speculation of the different narratives. And this is really straight, talk. And I hope that we achieve something in the end.
Henry, it seems like at least the U.S. has dialed back, I guess, the expectations of any sort of big trade deal, that maybe this could be just a de-escalation. What would a de-escalation look like in your eyes? Is a tariff suspension something that's likely? And how much could we see possibly?
Well, I think there's quite a number of ways to do that. First of all, I think de-escalation, President Trump already has done some of that. For example, he relaxed on the tariff on those iPads and iPhones and the computers. Remember, 80% of Apple phone was made in China, and also the 70% of PC was made in China, and half of Tesla's EV cars made in China. So President Trump already exempted $100 billion on those goods out of China for those high-tech companies. U.S. actually, companies made a huge part of this export business of China. When the top leader met business CEO earlier this year, they were saying that 1/3 of China export was done by multinationals. So they're going to hurt those multinationals. Walmart, used to purchase 80% of supplies from China. Now, they still have 60%. And recently, Walmart's saying, let's continue to purchase from the supplier from China. And so I think that one area, which is multinational driven, as demanding. Second, I think fentanyl is another issue. President Trump added a 10%, 20% totally on fentanyl, which is not really reasonable. I think we've seen a Assistant Deputy Secretary of State Department of the Biden administration wrote an op-ed not too long ago saying that they are cooperating with China very well. Homeland Security has talked to the Chinese Ministry of Public Security, and also China has taken a lot of actions, and the death rate of fentanyl last year, 2024, dropped 27%. So you can see, there's a lot of progress that's been taken. So I'm sure this is probably a low-hanging fruit. It just, they could have a more talk on that. And if U.S. can share who are really making those fentanyl, what are the, cartel or fabric. So I think, those areas can be done. But also, I'm sure there's also a TikTok issue there. President Trump said they can relax tariff on that too. So many areas. I think, of course, this has to come down. It cannot really sustain.
Right. And, Henry, I wanted to maybe take not a full step, half a step back, because, one of the demands that the Chinese side have been public about is that the U.S. needs to remove the tariffs and then they'll talk. I mean, the fact that the tariffs remain in place, but we are getting these talks set to take place. Do you think that precondition is still the same, or do you think the bar has been lowered right now for progress to actually take place while tariffs remain in place?
Well, I think this, I'm sure the U.S., going to affect the container shipping, the supermarket, consumers, Christmas, Thanksgiving holidays. I mean, it's all happening now. So what I think can be done is let's all reduce 70-80%. Let's realistically. I mean, Trump added the 25% on EU and Canada and things. Yeah, but let's talk around those 25%. So coming down. I mean, 145 and 125. I think that the 20% of fentanyl can be get rid of right away. I mean, that's really things very low-hanging fruit. That China has already done a lot. Just China didn't talk too much about that. Second, I think on 25%, let's all come down for another 90%. Bilaterally, and then the remaining 25% we can talk publicly. I can see there's many ways to handle that, because on 125% on both sides, it doesn't really going to work. It means decouple. It means embargo. So it's not going to work, and I think it's going to hurt U.S. company quite a lot. And China probably also hurt too, but China can endure hardship. I mean, they gone through all those hardship in old days, and they're never afraid of going out again. Yeah.
Henry, we had an economist come on just now just saying, when it comes to the data, they haven't quite seen the disruptions just yet. in April on any sort of tariff impact. Are you seeing anything from your end on whether supply chains have been moved around? Have we seen exports volume starting to fall from China to the U.S.? I mean, what are you seeing in terms of frequency data and the like?
Yeah, I just come back from Washington and New York, and I was attending World Economic Summit organized by Semaphore there, and 200 CEO was there. But basically, what they are talking about, the CEO is saying, even though there's a 90-day suspension of the tariff for many countries, which means 3 months of uncertainty and 3 months of not making decision are going to impact 3 years. So I think it's a confidence issue. The data may not reflect so quickly, but I'm sure going to reflect May and June. We already see some data happening already, and so I think that is not certainly is going to affect everybody. And I see some Chinese company already. They are preparing for sell more domestically now. They're also selling more to other countries. I mean, there's a study. 70 countries, if they really working on the current growth rate, they can absorb. They don't need to sell U.S. anymore in 1 year, and 112 countries in 5 years they don't have to sell to U.S. So companies are prepared for that, and this is really a big disruption. Because they were doing fine, they were buying all the good stuff from U.S. But now they all think twice now. They will be really frightened or being scared by this kind of escalation, astronomical escalation that nobody ever expected. So I think it's high time they'll come back and calm down and really talk. And I'm sure, being the two largest economy, not only for China and U.S., but also have a responsibility for the world economy stability. And now we have a war going on everywhere. You can't just have a trade war continue. That's really not relevant.
All right, Henry, we've got to leave it there. Thank you so much. Henry Huiyao Wang, founder and president at the Center for China and Globalization. Just want to bring you this latest news, hearing from the BSP now. The Philippines is talking about the potential now for a 75 basis point cut on the table for this year. This is after we got these inflation numbers yesterday. But then again, you got to talk about the strength that we see in the peso of late. Maybe it gives central banks like the BSP a little bit more room to cut rates in the future, Dave.
Yeah, they were very active intervening in the opposite, right? When the peso was at 59, pushing 60, and I think the last time we spoke with the Banco Central with Governor Remolona, they were between 50 and 75. And then we had this inflation report, which was effectively, I think it missed almost every single forecast, if not everything, closer to 1%, 5-year low on that. So this clearly has now opened the door for them to be able to lean into 75 right now, given the outlook, given the exchange rate, and given, more importantly, that room that latest inflation print has now given them. We're up 1% now on the benchmark there.
All right, we got plenty more ahead. This is Bloomberg. All right, this press briefing has been going on for well over an hour now. As you see, reporters are still asking questions to the team up there on the podium there, the likes of Pan Gongshan and Wu Qing. Yes, so it seems like they're still unveiling some things. There's a statement that's come out talking about another cut to the 1 month and the 7-day SLF, the standing lending facility rates. So more cuts across the board, Dave, it seems right now. So we'll continue to kind of recap all this as going on. But certainly the markets have turned more positive in the likes of this. Let's listen in to Wu Qing.
Political Bureau meeting, our commission have been implementing the plans for reform of facilitation, the reform of mutual fund, and carried out over 30 times of survey and researches, and focused on the suggestions and advices from the investors and institutions, especially put emphasis on the problems encountered by many investors and come up with an action plan. The action plan is ready. And today, we will release it, and it will come into force. And I have already introduced the basic approach, and for specific details, you can look it up on the internet. And this is a major reform measure.
一个重要的话题碰上，那就是我不知道在座的有没有去奥马哈刚回来的。
Very popular among the industries. I don't know whether you have came from Omaha, went to Omaha recently. Many investors has listened to Buffett's speech. He's a respected investor, and this year he will retire. But I believe the most important lesson learned from him is the value investment, long-term investment, reasonable investment, and repay the investors. These concepts will not retire, will not leave the stage either. And this is where we aim in this reform. After he retired, I think this age calls for a new great investor. Our market has a lot of enterprises and entrepreneurs, and we believe there will be some excellent investors and investment institutes, maybe not just one or two as excellent as him, but there will be good investment teams and institutions formed in our market, and this requires some important regulations to facilitate good investment institutes and investors. And the emphasis of this reform are following. The first one is to highlight the connection with the investors. We put focus on the reform of the pattern of fund management companies and make the industry turn to the origin of manage the asset under the mandate and actively manage equity fund. Charging pattern will be improved. Lesser performance must mean less commission. Through performance-based charging mechanism, we need to change the phenomenon of fund management companies' guaranteed profit regardless of performance. In addition, incorporate indicators that directly affect the investors' interests, such as whether the performance beats the benchmark and the profit and loss situation of the investors into the evaluation system of fund companies and fund managers, to urge the fund companies to shift from emphasis on scale to emphasize on returns. In addition, increase the proportion of bonuses that the fund company executives and fund managers are required to invest in their own products, and extend the lock-up period so that these key minorities are more aligned with the interests of investors. The second one is to enhance the stability of fund investment practices. There are misleading practices. To solve these problems, we ask to set a clear performance comparison benchmark as the ruler that judges the actual performance of the products to avoid the investment practice to be averted from its name, to make sure what you see is what you get for the investor. Meanwhile, to build a long-term investment, to build an enabling environment for long-term investment, we will improve the regulatory and stimulation mechanism for the regulatory authorities, self-regulatory organizations, rating institutes, and companies themselves to have a long-term evaluation for these fund management companies. And we made it clear that the over 3 years evaluation proportion is no less than 80%.
All right, that was the CSRC's Wu Qing there, talking a little bit more about introducing a floating management fee system for mutual funds, and even talking a little more about the Oracle of Omaha, Warren Buffett, set to retire, of course, and saying that China maybe able to bring some new Warren Buffetts, big investors, into this market as well. And certainly we did hear a little bit more on the PBOC, Central Huijing there, trying to be more of a quasi-stabilization fund for these markets. What does that all mean? Let's bring in Aidan Yao, Senior Investment Strategist for Asia at Amundi Investment Institute. I think about this briefing. I think about what happened in September when they had something very similar. We had better than expected, more than expected stimulus, and it led to a big epic rally. Could it happen the same way this time?
So I think the market is definitely going to receive this pretty well. This news in conjunction with the news about the upcoming meeting in Switzerland between the Vice Premier and Scott Bessent, all of these are indicating that the external pressure is starting to fade. Hopefully that the negotiation goes well and that leads to tangible declines of tariff rates. And in the domestic arena, we know that Beijing need to step up policy easing to shore up the domestic economy, pick up the slack left by exports. And now we're getting the triple R cuts, getting the interest rate cut. So I think it's going to help the economy in the coming months, and it's going to be a big confidence boost for the market.
What risks was this meant to remove?
Well, so firstly, it's a confidence, right? We have seen the worse than expected PMI numbers are showing that the tariffs are already starting to bite. And I feel that we're probably only scratching the surface in a potentially a long struggle with China's external sector. Now, even if, export is a small part of the economy, with a record uncertainty on the external arena, it doesn't really help a domestic sentiment. And when sentiment is low, confidence is low, people are cautious about the spending. So I think this is helping to shore up a sentiment. We know that one of the big policy lever is to step up a countercyclical policy easing to bring up that domestic demand. PBOC, Beijing Politburo has been talking about more monetary easing ever since December of last year, but we're not really seeing any actions taking place. So I think this one is removing that doubt about the policy put.
Does this at least bring down some sort of risk premium on what we've been seeing on Asian currencies, for example, or even the dollar? I mean, does it stop the dollar selling in any way?
I think dollar is facing a problem because of its own issues. Dollar is, on a declining path because of fading U.S. exceptionalism. A couple of months ago, I was on this program talking to David, and I said, there are three underpinning to that U.S. exceptionalism: exceptionally strong economy, exceptionally supported policies, particularly on the fiscal side, and exceptional innovation, particularly after ChatGPT, the AI thematic. And all of these three things are either fading or in outright reversal. Q1 GDP data last week suggests that the U.S. has got one foot in the recession. Rise of DeepSeek is also challenging the dominance of U.S. tax in the AI development space. And in terms of policy, Trump's policies are inducing a rise of a risk premium across the board in dollar-denominated assets. Yeah. Right, threats to Fed independence are hurting the confidence of U.S. dollar, rising risk premium because of fiscal issue, and tariffs is hurting the economy and corporate earnings. So I think a dollar is on the decline not because of ex-U.S. reasons, because of domestic reasons in the U.S.
How much more downside do you think there is in the dollar? Say, let's go by the benchmark, dollar index.
Well, there are a lot of estimates from a broker, so they range from 10 to 20%. I think.
It's a lot, yeah.
Exactly. I mean, the dollar has already declined quite a lot, and if you add another 10, 20% decline, then that's quite a significant move. So it's hard to say. I think the world portfolio has started with a very lopsided overweight in dollar assets over the past decade. Yeah. For an economy that is 25% of a world GDP, if you hug your global MSCI equity benchmark, you have 72% in dollar assets. If you hug Bloomberg Global Aggregate Bond Index, over 40% of the exposure in the U.S. And this is economy only account for 25% of world GDP. So the world has started from a very lopsided overweight position, and now with the fading of exceptionalism, I think it is quite a long way to go for that to unfold.
Okay, yeah, the starting point that's important was disproportionate for simply correcting for the extreme swings in the last decade. We'll continue the conversation with Aidan Yao here, of course, out of Amundi Investment Institute. Stay with us as well. There's plenty more ahead here on The China Show.
They have contributed a lot of insights and policy recommendations, and they expressed great expectations for this policy. The bond market CITEC board and risk-sharing instruments will help further expand the financing channels for sci-tech companies and equity investment institutions, and will also help further stimulate market vitality and confidence, attract more social capital into the area of science and technology innovation, and encourage private equity finance markets to enter into a mutually reinforcing cycle with stock markets.
谢谢各位发布人，谢谢各位记者朋友们的参与。今天的新闻发布会
Thank you, our
就到这里，
speakers,
大家
and
再见。
thank you, everyone. This is the end of today's press briefing.
Oh my God! Perfectly.
90 minutes.
90 minutes, almost on the dot. If you, I guess, leave out the 谢谢大家. But anyway, 欢迎大家. Thank you for rejoining us here on the China Show. We have 30 minutes left here on the show to really unpack what the last 90 minutes was like. A series of announcements, monetary policy, CSRC on the market. In fact, Zhang joined us earlier on, President and Chief Economist at Pinpoint Asset Management, and his view really in what specifically caught his eye there.
And they also mentioned that Central Huijin will play a role as a quasi-stabilization fund. I think this is the first time they, officially acknowledge that Huijin is playing this role, right? So that's something very important. That means down the road, Central Huijin, this could become a part of the Central Huijin's operation. It's not just a one-off thing. This could be more of a long-term arrangement. I think that's also an important message.
Yeah, we're back with Aidan Yao, Senior Investment Strategist for Asia at Amundi Investment Institute. And we just talked about this whole kind of selling America sort of trade still has further to go, as you say. What does that mean for a market strategist like yourself then? Where are the opportunities now?
So we've been sort of recommending our investors to do three things. Number one, stay cautious. We are facing pretty elevated, if not record uncertainties with the global economy as well as the U.S. policies. So you have to stay cautious, prudent, build some sort of hedges in your portfolio, get into some safe havens, Swiss franc, Japanese yen. Euro has been performed pretty well, and gold has been on the tier, right, essentially over the past 2 years. Number two, stay selective. There are a lot of risks that we don't know they exist, so black swan type of stuff. But there are a lot of risks that we do know do exist, right? Trade is one risk, tariffs it's another risk. So, if you are playing, for example, in the Asian market, you know that which economy are more geared towards the U.S. market. You know that which economy tend to be more vulnerable to tariff imposition. So steer clear from those markets and buy into the markets that are backed by more domestic-oriented economy with a big sort of domestic policy room to provide support. And number three, stay balanced, right? We talk about that the world has been very lopsided in overweighting U.S. over the past decade. You don't have to be pessimistic about the U.S., but just bring down that overweight to a neutral position that could create a lot of rotation momentum. And, once again, stay balanced. Don't overweight a market that is seeing degradation.
We've seen money go into Europe. I think going into last night's session, I think we were up several days, almost the longest winning streak. We almost got the longest since, I think, 1999. Japan's done well. India, by the way, since, I think, Liberation Day, I think is the best performing major market globally. Can I trust those three rallies, India, Japan, and Europe?
So for Japan, I think it is a lot of unwinding carry trade, right? For Japanese investors over a number of years, they borrow low in Japan, put a proceeds in dollar-denominated assets. Now we're seeing a reversal of that U.S. exceptionalism, so carry trade being unwind, boosting Japanese assets. We like India. India is a long-term structural positive story for us, and valuations have corrected over the past 6 months. So we're positive on that market. And there are other opportunities in Asia. Even though that our overall stance is close to neutral on China, but if this policy easing really help to shore up domestic demand, then domestic-oriented sectors that could benefit from that. You could also argue that with the rise of DeepSeek and so many other large language models coming through over the last couple of months, that challenge to the U.S. dominance in AI development could have a further room to run. And so we like technology-related sectors in the offshore market as well.
You've mentioned tech. Can I talk about Taiwan? Sure. I mean, we rarely talk about it, right? We talked about the Taiwan dollar and the crazy moves that we've been seeing. What have we learned from it in any way? I mean, is something breaking in the system?
So a disclaimer, I'm not an expert in Taiwanese market, but after the 2 big days of a movement, I put out a chart, and if you look at the daily change of Taiwan dollar versus the U.S., and you calculate standard deviation of a daily move over the past 30 years since the 1990s, it's about 0.3. And what we saw on Friday and on Monday were 10 standard deviation type of movement. So I've seen a lot of people trying to use fundamental justifications. I think these things will help you to maybe in the big day of a movement, 1 standard deviation movement, but doesn't help you to explain 10 standard deviation movement. So either something is breaking to cause that, or something is breaking because of that. So I think I draw 2 things. One is that this is not an idiosyncratic isolated case, right? A big appreciation is causing rising tide lifting all boats, right? HKMA has been in the market for a couple of days defending the peg. We have seen pretty significant movement in CNY, in ringgit, in Thai bars as well. And number 2, if you take a step back and look at historically, whenever the US dollar is suddenly and substantively changing course, it does cause something to break in emerging markets. Now, this time is different because in the past, it creates a problem for dollar borrowers. So when dollar all of a sudden appreciate, capital flow out of emerging market, leaves a carnage in those markets. Yeah. This time, the dollar is weakening. So it doesn't create a problem for dollar borrowers, but it creates a problem for dollar savers. If you accumulate so much of surpluses against the U.S. and put that proceed in the dollar-denominated assets, and without fully hedging your currency risk or rate exposure, and when that U.S. exceptionalism fade, it creates a problem for savers.
Yeah, I mean, people who were sitting on dollars had to pay for sitting on dollars.
Exactly.
Aidan, thank you so much. Aidan, they're senior investment strategist for Asia, Amundi Investment Institute there. And I mean, that was almost dating advice from Aidan, right? Stay selective, stay balanced, stay cautious, and stay nimble? Yeah, stay nimble. There we go. So not just
don't put all your eggs in one basket.
Okay, all right, we're getting all right. Why don't we get back to markets? Why do we talk about? There's really no good segue there. No, in fact, very sharply dressed, almost ready for a date. Stephen Chu is with us here, Chief Asia FX and Rate Strategist at Bloomberg Intelligence. Check that silver tie out. Stephen, fantastic. Thank you so much. It's been a busy morning. What stood out to you?
So PBOC, obviously, I think yesterday when the news came out that they're going to have a press conference, everybody knew what's going to happen, just like last September. So a host of easing measures. Obviously, what caught the headlines, like policy rate cut 10 basis point, triple R cut 50 basis point. That almost matched what happened last September. Last September was 50 bips, triple R, 20 bips policy rate. So somewhat similar. Yeah. I think it's a matter of time that China actually rolled out this measure. Like everybody has been expecting since last December, basically, but it never happened until now. It's quite clearly because China want to see how the trade war is going to develop, especially April, what happened in April. But now, I think what's clear and what helps China is actually markets start to doubt about the U.S. The U.S. dollar assets, equities, U.S. treasuries, that helps because the yuan has stabilized, and hence there are a lot of room for them to ease right now. So that's why, especially now in light of the U.S.-China talks, we don't know what's going to happen. There could be a deal, but the U.S. can always overturn the deal. But it doesn't matter because China just focused on their own business. The economy needs support regardless of the trade war. So that's why now is the perfect timing to launch this stimulus.
And where does that leave the renminbi? Are we likely to see something that's more stable? And maybe we can bring down the temperature, the appreciation in the currency.
Actually, yuan basket has been my favorite. This year is one of the most clearest, is the best trade. Because regardless of the dollar weakness, the yuan basket has been dropping. And China has sort of engineered that. They allow the yuan basket to drop. Because these days, it's not just about US-China trade. Because China's largest trade partner is Europe and ASEAN. So that's why a weaker basket actually helps exports despite the dollar weakness. So for the basket, we actually see more downside. Obviously, if it drops too fast, they will come out and say, probably signal through the fixing, but the downtrend is clear. For bilateral rate, depends on the dollar, but we can see that it has somewhat stabilized at 7.2. Downside for dollar China still there because if it's a dollar collapse story, obviously dollar China will have to go down, but to a lesser extent compared to other Asian currencies. Taiwan, of course.
Yeah.
Well, how are you thinking about Taiwan? given what happened on Friday and Monday? Is that a Taiwan story, or is there something that's globally relevant there that we've yet to see?
It's a Taiwan story because Taiwan is quite unique. Actually, it's one of the most exposed to dollar asset sell-off. It has over $700 billion of dollar assets for the livers, and livers has always been the biggest players. They always hold a lot of dollar assets, and whatever happens, they usually just hedge it. But now we're talking about a structural de-dollarization, which if it continues, they may have to sell their assets. They may not have done so yet. They may just increase hedging, which caused the NDF points to collapse. But going forward, if market moves away from the dollar, they will have to think about something else to invest. So it's just a snapshot of what's going to happen for the rest of the world. So that's a warning signal.
HKMA certainly is one that's been intervening. I mean, we heard from Eddie Yu yesterday, talking to Leshko about the reserves that they have to keep fighting this and defending the peg. How much longer can they do so?
I mean, they can always do it because, you know, like how the HKMA works, they always set aside a certain amount of dollar asset to back the peg. So right now it's $280 billion of US dollar. That's as much expected as any country's FX reserves. So to defend the peg, yes, they can do it. I think the question going forward is whether the dollar is still suitable for them to peg. Now, this time it's not because of Hong Kong or mainland China, it's because of the US. So it's for Hong Kong's and mainland China's choice to decide whether they want to peg to something else. Well, people will talk about the yuan again, but actually to me, actually dollar is still the best choice. If they have to move away, actually there's not much choice. Let's bring in gold.
Oh.
We know what happened like during war times. I know it's a little bit extreme, but let me just put it out. Gold might actually be a better candidate because if there are like geopolitical blowout, basically gold is really the most credible currency.
Interesting.
Okay.
Stephen Chu sticking his neck out. Thank you. Chief Asia FX and Rate Strategist at Bloomberg Intelligence. We got plenty more ahead. This is Bloomberg. Let's get to the latest now on what's going on in India and Pakistan. Well, Pakistan says it has shot down 5 Indian planes carrying out strikes inside its territory. And India says it ordered the strikes against what it calls terrorist camps after last month's attack in Kashmir that killed 26 people. Let's bring in Bloomberg's Ruchi Bhatia joining us now from New Delhi. And you know, just bring us up to speed, Ruchi, on what's really happened in the last few hours.
Well, this is pretty much on expected lines. In the early hours of Wednesday, India said that it had conducted military strikes on as many as 9 targets, and in what it calls a very precise and restrained response from India's side. And this, of course, is coming in the aftermath of 26 people getting killed in Indian-administered Kashmir. Remember, this is, of course, coming in after India had vowed to punish the perpetrators of this heinous act. The question, of course, now is will this issue escalate further? There are, of course, important meetings through the day. The Indian Cabinet Committee on Security will be meeting at 11 a.m. We will see, this is headed by Prime Minister Narendra Modi, and we will see the kind of response that India will give. There will be a briefing from India's Defense Ministry as well at 10 a.m. And also from the Pakistan side, we will have the National Security Committee meeting at 10 a.m. So through the day, we will see the responses coming in from both the sides. Also, remember, this is coming in after various world leaders had also called for a dialogue and a peaceful solution to this issue. In fact, U.S. Secretary of State Marco Rubio spoke to both India and Pakistan and has called for restraint. One also needs to see that what kind of a response, because there is a risk of this issue escalating further, what kind of a response we will see from the Indian market. So far, it does look like we're headed for a weak start as far as the Indian markets are concerned. In fact, the GIFT Nifty was down almost 1.9%. So clearly, all eyes will be on the Indian markets as well as the rupee as well going forward. But one needs to see the kind of response that both India and Pakistan will give, and whether this issue will really escalate further or not.
Ruchi, thank you so much. Ruchi Bhatia there, our South Asia economy editor. Yeah, so in this time next hour, the cash markets open in India. As with the currency, futures are still down, coming off lows. And the hour after that, the top of the hour after that is actually when we get markets in Pakistan also coming online. So just watch out for that. Plus, of course, the briefing which takes place around that time. Right. Speaking of Pakistan, we did speak with the defense minister earlier on here on Bloomberg TV about that escalation in the conflict with India.
And 5 other locations in Pakistan, giving this impression that these places had terrorist camps. Well, I have, invited the international media and our local media to visit all these places and see for themselves if there are any terrorist camps or terrorist outfits on these locations. The civilian population has suffered. A lady has been martyred, a child has been martyred, and few other, casualties have been suffered by Pakistan, civilian casualties. And 2 mosques
Minister,
have been destroyed.
Mm-hmm. The question right now that's hanging here is how far is Pakistan willing to go here?
It all depends upon this. This has been initiated by India. If India is ready to back down, they have taken the initiative. We have just responded. We have been saying all along in the last fortnight that we'll never initiate anything hostile towards India. But if we are attacked, we'll respond. If India backs down, we will definitely wrap up these things, But as long we are under attack, under fire, we have to respond. We have to defend ourselves.
So you've also been speaking to the U.S. What we understand is that you've been speaking to Secretary Rubio. Have you talked to Washington after these attacks from India? And what about Beijing? How does China play into this conflict?
Well, China is definitely, they are the third party to Kashmir. A part of Kashmir is with China also. So this is something I think China is a very, very relevant player in the region. Very, very relevant player. They can use their influence. I don't know whether it will work with India or not. But beyond China, if other countries in the region, like in the Arabian Gulf or Russian Federation, President Trump, has been since he has taken over presidential office in the United States, he has been talking of conciliations and reconciliations. And, a peaceful world he's, talking about. He can also play a very significant role in bringing the two countries to halt the hostilities.
Minister, part of the reason the world is so concerned with this conflict is because your nation and India are both nuclear armed. How do you prevent this conflict from escalating before either country starts talking about nuclear deterrence?
Well, this is a huge risk. When two nuclear powers are confronting each other. And we do not have any intention of using a nuclear option. That is just something which guarantees our sovereignty.
And that was Pakistan's Defense Minister Khawaja Mohammad Asif. And Bloomberg News continues to reach out to Indian officials for comment as well. Of course, as we hear more, await more details in this Defense Ministry of India to hold that briefing in just some time from now. It certainly leads to a lot of questions on can both sides actually afford to continue on this sort of protracted conflict, right? You have so much at stake for both countries. You take a look at India. It's a darling among global investors right now. You talk about how it's one of the best performing right now. They're going through trade negotiations with the U.S. Could any of this disrupt that? And again, Pakistan also going through some big economic reforms.
Yeah, and the bailout conversations there and the IMF, and it's the last thing certainly. I mean, if it does, of course, become a protracted a conversation, because both sides, and I think it's important to indicate that both sides are basically saying this is not not preemptive. This is really in response and a controlled and targeted response to what took place, of course, days ago. They're open to talking as well. But yeah, I mean, with everything else that's going on out there, how much mind space is there really to dedicate towards certainly something as tragic as this? And yes, as far as markets go, this is really one of the last things that, and you can see that with markets today, right? Yeah. Apart from everything else, it's really Indian futures that are feeling the most pressure going into today. We are getting some commentary coming through here, and you can check this out on our TLIV blog today. And the likelihood that we will see the Indian rupee weakening today, but also might get, this is reported to one analyst there, intervention coming through out of the central bank today. So stay tuned for that. The market opens up in the next hour. Plenty more ahead. This is the China Show. That rate cut that was flagged several months ago, in fact, even before the turn of the calendar into 2025, we finally got it today. In fact, not just one, a series of rate cuts just about across the board. Small magnitude, but in terms of just the breadth of it, right? Triple R, 7-day reverse repo, structural tools, standing lending facility, all about 10 basis points, and other measures coming through to support the market and also the economy.
Yeah, it's interesting. Charu Chanana from Saxo talked about this isn't just easing. It's Beijing laying down the groundwork for resilience, reform, and retaliation if needed. So it was not just a boost in liquidity, not just a boost in credit, she says. The focus on tech, you have consumption, you have elderly care, signal a bit of a broader push to support some of the structural drivers of the economy. So certainly people are taking this as a positive news. You take a look at how some of these stocks are reacting. We're focusing on one sector in particular, which is the brokerages. Obviously, given what we've heard from Wu Qing, the CSRC regulator, talking about this quasi-stabilization fund that China Central Beijing and the PBOC are going to potentially act on, that basically is sending all these brokerage firms higher today.
Including the other page there is, when you talk about financials, brokers, banks, and also the property names and developers are also catching a bid here. And the guardrails, as Yvonne is pointing out, the important message here is that they're raising the guardrails ahead of the trade talks taking place, maybe pulling back the strength that we've seen in the currency to allow them more flexibility to ease policy, if in fact that's what we need moving forward. There
you go. HSI is still up some 1% here this morning. That's it for us here from the China Show. Insight with Haslin Ahmed is next.